Welcome back to the IB Investor channel. In this video, we're going to take a look at Latour, and we're going to cover a short introduction of the company, the share price development, the unlisted holdings, and much more during this video. So the founder of the company sadly passed away here in 2023, but it's Gustav Douglas, where you can see here on the picture on the right side. So he has had a MBA from Harvard Business School here that he took in 1964. He has worked as the CEO for one of the biggest newspaper here in Sweden called Dagens Nyheter and Expressen here between 1973 and 1980. He also founded then the investment company here, Latour, in 1984. And we'll take some deeper look into what happened with that development. But he's also quite famous then for finding Melker Schörling, one of the big CEOs here in Sweden, and also the founder of the investment company here, Melker Schörling, that unfortunately was unlisted here quite recently, or in recent years. On the left side here, you can see Gustav Douglas' two sons here, so Carl and Eric Douglas here, who are currently controlling the company here, and they have been working within the company for quite a few years. So these guys are no rookie, so to speak, to the company. So, but I think it's worth mentioning that, you know, aside from his sons, I think that it's a huge loss here for Sweden with the passing of Gustav Douglas. He is, you know, the one and only basically here in Sweden. He has created so many jobs here for Swedish workers. You know, he really put Sweden on the map here, you know, with Securitas, with Assa Abloy, and many other, you know, great companies here that he has developed within, you know, Latour here. So, you know, there's a huge gap here to be filled now that he's gone, and I don't think there's, you know, anybody here that you know, can replace him in that regard, because he's just a very special industry man here, much like, you know, John D. Rockefeller here or over in the US. This guy have had the same kind of presence here, creating and building, you know, world-class leading companies here in Sweden. So very sad to see him passing here, unfortunately, this year, and it's a huge loss here once again. Probably said it many times here, but a huge loss here for Sweden for sure. Now the company AB Hevea, which later became Latour, was a part of Skinet Group. So this was basically the start here for this company. So the company wasn't named Latour from the beginning, but rather it was a different company here that was named Hevea. So Hevea received a new principal owner here in the form of Gustav Douglas through the company, and the company took its current operation and strategy. And Hevea then acquired 95% of Securitas Group, and Securitas still exists today as a listed company here, and is also still owned by Latour. And 31% of Almedals Dalsjöfors, 25% of Trelleborg, which is also a listed company here in Sweden, and 15% of Faros, and increased its ownership in Force Invest to 30%. Boliden was also one of the larger holdings here by 5% of its capital. Holding in Finans AB Nyckeln and SSR Holding AB and Civic Fondkommission AB were sold. So quite a lot of things happened here in 1985. Some of these companies I've never heard of. Some of them probably, you know, rebranded or renamed into other companies, and some companies probably don't exist today. So for example, I never heard of Faros. I never heard of the Civic Fondkommission. So probably many of these companies, you know, just disappeared in history somehow, but at least these are the founding steps here of this company. In 1987 here, the company changed name here from Hevea to Investment AB Latour, and also minor changes into the investment portfolio. So now the company took form in the current name that it still has then. So Latour is the name that most investors knows about these days. Now for quite a big milestone here in 1994, so Latour contributes to creating Europe's largest lock group by establishing Assa Abloy. And everybody knows Assa Abloy, I think, who have anything to do with locks, or most of your doors to your apartments, or even these facility doors, as you can see here in the background. The big gates are often Assa Abloy. They have many other different brands as well, so sometimes you will come across a lock that you don't see the name of Assa directly, but it could be a subsidiary then to Assa Abloy in a different form here. And then Latour acquires the industrial group Swagon. So Swagon is still a company, or unlisted company here within the group. And then also Nobex here, which is called Nordlock these days. And Nordlock is also one of the companies here that Latour still have in their portfolio. There's much more history that you can find on their homepage, but I just figured if we're going to go through the history here, then or all of its history, then we're probably going to spend an hour just talking about the history, and yeah, most of you will probably have left. Anyways, Latour still or currently has a market cap of 141 billion Swedish kroners here. It is currently trading at large cap here under the ticker symbol LATO, and it's the B shares that are being traded, so the A shares are unlisted. Now for the listed portfolio here for Latour, and we can see here on the right side the total value of those companies. So this is not the total market cap of Assa Abloy, but rather the exposure that Latour has in terms of shares. So here you can see the left side, all the shares that Latour owns currently. We can also see the acquisition value here. So basically Assa Abloy here, which is the largest holding here by 25 billion Swedish kroners, you can see that they have acquired, this company for about 1.7 billion, and it has turned out to about 25 billion. So quite a massive return here for this company. And here we can also see some other companies here. So for example here, CTech, they have acquired about 1.1 billion Swedish kroners worth of capital here, but we can see that the company, or rather the value of the holding, is currently down to 375 billion. So not all of the investments that they have done have been successful, but as you can see, CTech is one of the few here, if not the only one, where they actually have lost value that hasn't been realized yet in the portfolio. Many of the others, as you can see, Securitas twice that of the initial investment, and as you can see here, Nederman, for example, it's much more. So most of these companies here, they have made a great return, and as you can see here with Truex, for example, almost 10 times here since they acquired the shares here. So quite a good overview here on how the situation looks like for the listed portfolio here. And as they are listed, you can go in and search for these companies and research further if you want, because yeah, most of the information here is official, so to speak. Now for the unlisted portfolio, and this is much more trickier because some of these companies, if not all, it's much more difficult to find financial information concerning this, so we have to rely on the information which has been provided here by Latour themselves. So here we can see the different companies here on the left side. So Bemsiq, Caljan, Hulta, Latour Industries is a little bit difficult to see, and Nordlock and Swagon. So as you can see, Nordlock and Swagon has been in the portfolio here for many years within Latour, and then Caljan is a quite recent acquisition here. Latour Industries, I don't remember exactly when it was created, but here at least you can see the turnover and how big they are. So basically the biggest area here would look like it's Swagon right now with a turnover here at almost 9 billion, and then followed by Hulta here at 7 billion Swedish kroners. We can also see here the operating profit. We won't go much into that, but I think this is the more important one, the operating margin here. So we can see here that some of these companies are actually producing a very nice operating margin here. So especially here at Nordlock, that has a almost 25% operating margin, and this is almost tech-like margins in terms of operating margins here. We can also see Bemsiq a 24% operating margin, which is also very strong. So the only weak one really is Latour Industries here at 8.3, and 8.3. It is kind of low, I would say, even for an industry company, because that means that the profits are probably even lower, probably 8 or below in terms of percentages here. So yeah, and then we can also see the number of employees here on the right side. So the biggest one here being Swagon here by far. Latour also has some part-owned portfolio here, so compared to the previous page here that I showed, those were fully owned, but these are part-owned, so that means that Latour does not have full ownership of those unlisted companies here that they're mentioning here. So basically they have some part-owned business here called Oxion AB, for example, within some technology sector here. But as they're saying here, the other holding jointly constitute only a small part of Latour's net asset value. So for investors, this is nothing, to pay attention to, they're saying. So, and if they're saying it, we're just not going to pay any attention to it either. Now for the share price development of the stock, and as you can see, the company has been listed here since 1984, and we can see here the maximum here, and this does not include any dividends or special dividends or anything like this, but despite of that, the company has returned a massive 130,000% here since 1984, so dwarfing many other companies here in Sweden. However, during this period in 2021, I think it was, the company traded at a steep premium here, so the company was quite overvalued, and we'll look deeper into this later in this video. But as we can see here, the company did trade at a 373 kroners here at the top, but it currently closed here 220 kroners, so a decline here in share price by almost, or actually more than 40% here from top to current price. So quite a big decline here in share price, but for the long-term holders, a 40% decline is nothing. This company, the share price has done tremendously well for shareholders here holding it for the long term. And we can also see here that there's about 100,000 shareholders here at my broker Avanza, so one of the most commonly owned stocks. And then the amount of shares which are being shorted here, 0.39%, so very low portion of the shares are currently being shorted right now. Now for the total return calculator here, so I decided to go for the 10-year period here, so we can see that for that period, the stock has returned a CAGR, and this includes the dividends reinvested here, at about 21% for the 10-year period, or a 562% total return here for the 10-year period. So we can also see here that the dividends are quite important here. So if you did not reinvest the dividends here, you would have only received, but you would have received a 450% gain here. But if you included the dividends here and reinvested those, you would have received an additional 113% here. So quite impressive. Now we can also see here for the total period here, if you included all the dividends or special dividends that the company has provided here, you can see that you would have received a 560% gain here for the total period, which is crazy. So, you could have invested very small amounts of money here and you would have made a fortune owning the stock for the long term. And as we can see here below, that the company has provided a CAGR of about 23% here for this total period here. So quite a massive stock to have owned. I'm not so sure that the track record is going to be the same going forwards, because of course now the company is a much bigger one compared to, back in the days, but still very impressive figures here for the long-term holders of this company. Now for the consolidated income statement here. So basically for the fully owned companies, for example here, so we can see that the net sales here in blue has increased very nicely over time, and we can also see here in the most recent quarter that they had a margin here 38.6% here for the rolling 12 months, and going back here we can actually see that they did have a higher gross margin here at 41.8% in 2016. So still very good margins here. I would say anything close to 40% as an industry company is very good. However, looking at the operating margin here at 14.7% here for the rolling 12 months, which is the highest that they've ever recorded, which is very good. However, if we only look at the most recent quarter, like the Q3 alone, so to speak, the operating margin was a little bit lower, so 13.2% here in the Q3 alone, basically. However, the operating margin has been much lower here. So actually the lowest point was here in 2014, where the operating margin was at 9.8%. Unfortunately, this company does not provide any good profit margins here, so I just decided not to include that one. And then here we have the orange bar here that I didn't mention yet, but that's the operating income here. So we can see that the operating income is growing pretty nicely here year over year, and actually quite at a fast pace here. So this is much more than 10%. It's probably closer to 20% or something like this. So very good development here in terms of operating income for this company. Now this company, as far as I'm aware, they are trying to build out the unlisted portfolio here. So in this year so far, they have acquired a new company here called Doll Air or something like this. So a UK-based company, as far as I'm aware, and that will contribute here to about 200 million Swedish kroners in sales. However, they have made other, investments during the year in, I think, for example, they invested in, I think it was in Alimak in direct share issue and also in CTEC direct share issue. So it's not the only investments that they've done. It's just that this is an acquisition, a new company that they've acquired, which is the difference here. Now for the business area Bemsiq here, so we can see that the company has developed their sales and results quite nicely here. So this is what most shareholders like to see with any company, that the net sales are increasing year over year, and also the operating result here in the black line here also increasing here very nicely. So we can see the comparison numbers here. So this company is actually growing very quickly here, as we can see. However, the only bad stuff or bad things that we can see is the operating margin taking a small hit here, going down about 9% or 0.9 percentage points here, but very strong performance of this company. Now for the unlisted company, or another unlisted company, Kean here. So this does not paint the same picture as the previous one. So here we can see the net sales are actually going down here for the rolling 12 months here, which is a decline, but not a big one, but still a decline here, as we can see. And also the operating result here is going down quite big, and we can see here year over year figures that the decline in net sales is quite big in the most recent quarter here, comparing it to year over year figures here to 2022, where it was 669 million and now currently down to 457 million. And we can see here the operating result here has taken a big hit here. So almost, almost 1/3 of 2022's numbers. And we can also see the operating margin here has received a big cut here, almost going down in half here. So this company, Kean, is having some difficulties here, and they're also saying here that the company has a lower order intake. So this company currently, which is fully owned here by Latour, is struggling here right now. Now for Hulta, so this company, as we can see on the bars here, are doing quite well. So net sales year over year is going up. It's growing and growing, and we can see also the operating result here going upwards, which is of course what investors like to see. And we can also see on the right side here, net sales going up year over year, and also operating result going up year over year, and an impressive margin expansion here. So going from 11.2 in 2022 to 16.3 here. So a very massive operating margin expansion here year over year. So this company, Hulta Group, has done a very, very good job here to drive both net sales and also operating results here, resulting in a very good margin here. So very good from management here, driving or operating this company. Now for Latour Industries, so this can be a little bit confusing. It's not the listed companies here which is included. It's an unlisted company called Latour Industries. It's much like Hulta that we just looked at. So it's a separate business here that they own. So it doesn't have anything to do with the listed companies, just to clarify this. But yeah, it's basically a very good development here in terms of net sales here in the most recent years here. So the numbers are going up, which is good to see. We can also see that the operating result, much like Hulta, is just going upwards, which is what we like to see. And year-over-year figures here, quite strong net sales growth here, and also quite strong operating result here, as we can see. And management here has also been able to increase the operating margin here, so going from 8.8% here to 10%, which is very good to see, especially during times like this where, you know, inflation and cost inflation has, you know, affected many companies. So this is just what we love to see as investors. Now for Nordlock, one of the oldest companies here in their portfolio, which is fully owned here. So net sales is also driving upwards here, which is good to see. And we can also see that the operating result here in the black line is also driving upwards. We can see on the right slide here, or right page here, that the net sales has been increased here year over year, also the operating result. And we can see that the operating margin here in the most recent quarter has been driving upwards here. So management has done a very good job here. So going from 25% here almost to almost 28% operating margin. So this business, Nordlock Group, is a very, very good business, it looks like, because these operating margins are no joke. These are on par with many tech companies. So I think that this company must have some, you know, very special patent or something like this, because these margins are quite unusual to see within industry groups. So very good performance, and it looks like they have found a niche here that they can offer their customers and ask for very high prices here, and the customer can't say no. So very impressive figures here. And now for the final fully owned company here, so Swagon. So they're telling us here that high volumes and a record strong operating profit. And we can also see it here on the figure on the left side that the net sales had been declining here from one year to the other. But now we can see that ever since 2020 to 2021, the net sales has picked up very fast here. And also the operating result, as you can see, the black line here has taken off, which is good to see. So the net sales here increasing year over year from 1.7 billion up to 2.2 billion almost, so very good. And also the operating result, a massive increase here, so going from 186 million to 290 million, which is very, very strong. And we can also see a very good operating margin expansion here, going from 11% to 3.5% here, so very, very strong again. So management here has done an excellent job here, both to drive net sales but also to increase the operating margin expansion here. So this company is making more money here compared to what they did previously, and that's just excellent to see, and that's something investors enjoy watching, especially during times of inflation here, for sure. Now for a fast overview here, so the net asset value here in September was 172 Swedish kroners. We'll take a deeper look into this later on in the video, but here we can see the portions here. So the investment portfolio, which is the listed companies here, it's about 65 billion. The wholly owned companies, the ones that we just went through here, 56 billion. So they're pretty close here, as you can see in value. And then they have some other holdings here at 0.2 Swedish billion kroners here. And then they have some net debt here. So the net asset value here for this company is about 110 billion Swedish kroners in the Q3 earnings. However, the listed portfolio here will make so that this number will fluctuate over time here. So this number, we'll take a look at this number later on in this video. Now for the geographical exposure here for this company, and we can see that, you know, most of their sales is actually within Europe here. So, you know, they have great potential here in North America, where they only have about 14% exposure. And then we see here in Asia Pacific, they only have about 6% here. So quite a large market here, both in Asia and in North America, where they can, you know, improve their sales, and especially North America, which is a huge market here. They should have the potential here to drive, you know, further M&A going forwards here within this company to make further acquisitions, and that way probably get more exposure towards North America. Asia, historically speaking, it's a little bit more difficult. Many companies tend to lean more towards, the Western countries here, but even in Asia, they have a lot of potential here to drive further sales and further, expansion as it looks like right now. We can also see that in the numbers here within the brackets, how it looked like in the past year. So we can see that it's mostly Asia here that has grown here. So going from 5% to 6% is quite a strong development here. So it's just USA, which is flat right now. Now for the listed companies here, we're not going to dwell on this too long because most of these companies can be reviewed by any investors because they are listed companies and they have official numbers, but this is just a quick overview of how it looks like over time. So we can see that the only company here really struggling is CTech here, where you can see the EBIT margin here driving down to the bottom here, which is not very good. However, the net sales looks a little bit stable at least, but it's the profits here which are being shattered here. We can also see that Fagerhult had some tough year here in 2020. We can see that Tomra right now has some problems here with the profitability here of the company, and also Troax here has some problems here with the profitability. So, there are some companies which have some struggles, but there are some others, for example, Assa Abloy, which numbers just keeps on going up, it looks like, and HMS Networks, also one of those companies that their figures it just looks like it's going up and up. Same with Sweco here. Over time, it's going up. So most other companies, it looks pretty well or good, but we can see that some companies, Securitas, they've had some bad years here. So for 3 years, Securitas had some struggles here, but it looks like they picked up some speed here again. So just a fast snapshot on their listed portfolio here and how it looks like. Now for the debt situation and the outstanding shares, they have nothing to do with each other, but it's just to reduce the amount of slides here. So the net debt here is in the blue line here, as you can see. So we can see that the net debt, they have acquired a lot of net debt here as of late. So it peaked here at 14 billion, but as we can see in the most recent quarter, trailing 12 months here, it's down to 13.1 billion. So about 1.1 billion in decline in terms of net debt, which is good to see because too much debt is never good. Even for a holding company, so to speak, it's not good to acquire too much debt here. So management has changed the trend here. So it's going to be interesting to see how this number is going to develop in the coming quarter here or quarters. In the orange line here, we can see the number of shares, and it looks pretty stable here at 639 million up until the most recent year here, where we can see that about 1 million shares have been issued here. So no big change really in dilution here, which is good to see. And now for the dividend fans here. So on the left side here, we can see the dividend yield over time. So currently it sits at a 1.7% dividend yield. However, the company has traded at much better value propositions here in terms of yield, so dividend yield. So, back in 2014, you could have purchased this company at a 2.5% yield. And all the way here up until 2018, you could have purchased this company at above 2% yield here. But since 2019 and up until recent time here, there's never been a period here where you could have purchased the stock here at these levels here back in 2014 at a 2.5% yield. So kind of unfortunate here for investors wanting to get in cheap. It's not possible to do anymore. So now the new reality is somewhere around 1.7% yield here. Per share, however, the company has increased the dividend here for many years. The off year would be the fiscal year 2019, which was the COVID year. In 2020, this was paid out, so a decline here of 50%. However, we can see here that once COVID was over or past that 2020 year, the management, or rather the board here, gained some confidence again and has increased the dividend here quite nicely. So from this year to this year, 10% and about, I don't know, more than 10% here for the most recent year here. So pretty good development here for this company in terms of dividend here, but we have to remember that going forwards now this company does have some net debt here, so it could be the case that it's not going to be some massive dividends increases here, but rather that the board is probably going to be a little bit more conservative here, I think, in terms of increasing the dividend too much here because of the net debt that they have acquired. So, you know, I think for the next dividend, it's not going to be a crazy 20-30%, but perhaps a 5 to 10% in the next year, most likely here. And that's only the net debt which is causing this, I think. For the shareholder structure here, we can see that it's the family Douglas here. So basically Carl and Eric here that owns the company and controls the company. So they have 76% of the capital and 79% of the controlling votes here of this company. So nobody can challenge them in terms of control right now, unless they would have made a massive share issue where they would not participate here. So, but yeah, it's not going to happen basically. We have some other family here. So Palmstierna that controls about 6.32% of the votes and 1.53% of the capital. So no challenge from them. And then we can see many other companies here. And also some other families here that hold some shares in this company, but nobody comes even close. So it's basically the family Douglas here that owns and controls this company. And I think that if they wanted to, they could probably, you know, buy out this company from the stock market if they wanted, because they have so much of the capital already. So taking on some extra debt here would not be an issue for them. They could take it over here and pay it back probably within 5 years. So that's the only worry here for company or investors wanting to own this for the long term, that maybe the company could be gone within a few years. But as it looks right now, 76% of the capital is owned by the family Douglas here. Since this is a holding company, there's always the possibility here for premiums or discounted values here in terms of net asset value. However, for this company, which is a little bit different here, we have a big premium here that investors are paying. So they're paying basically 22% more for the assets compared to what the net asset value is offered from the company. So you're basically paying, for 1/5 more here for some reason. So, but it's, the company have had a stellar development in terms of share price, so that's probably why investors are willing to pay up. But I think it can be good to know that if you're buying the company right now, you're paying a 22% premium to net asset value here. However, as I did allude to at the beginning of this video, we can see that it has been much worse. So looking at this period here, investors paid up almost twice of net asset value here as a premium. So basically, paying $2 for something, or $1.9 worth of something that, was worth perhaps $1 here. So historically speaking, within the 3-year period or 5-year period here, investors has paid up a huge premium to own this company. But there has also been a period here, a brief period, where the company did trade at a discount here at 14% discount. So, if you want to be a little bit optimistic, it could be the case that you could purchase this company again at a discount, but currently you're paying up for this holding company and paying a 22% premium here right now. So quite expensive in the short term, I might add. Right, this was it for this video for this time. So please like the video and hit the like button if you did like the video. And please do subscribe to the channel for more content. Thank you very much for watching. Have a pleasant day. Bye.